commodity monies use nature to maintain the ledger. And so as we've kind of iterated through the different commodities, gold is the most immutable or reliable natural ledger that we can, work with. If you look at banks and central banks, obviously that's a nation state administered ledger. And so it comes down to how banks are regulated or what the structural kind of fiscal situation is in that country.
In this video, let's welcome Lynn Alden, who is an investor and expert in economic analysis. She discusses her economic outlook, expecting a possible mild recession in the coming years. She highlights the following points about gold and Bitcoin. Lynn Alden maintains a bullish long-term view on gold, suggesting it as an attractive asset. She emphasizes gold's historical role as a reliable store of value, particularly during uncertain economic periods. And further, she expresses optimism about Bitcoin's potential as a store of value. Alden believes Bitcoin's scarcity and increasing global adoption could contribute to its appreciation over time, making it a favorable asset in the current landscape. So keep watching this informative video till the end.
So I expect us to eventually see at least a mild recession. I don't know if it'll be this calendar year or next calendar year. But one thing I've been tracking throughout this kind of spring and summertime is that throughout 2022, so many people are focused on interest rates, whereas I think the deficit's not getting quite enough overall focus. So during 2022, we had a narrowing deficit in large part because taxes were much higher that year because they were based on 2021 capital gains and other economic impacts from that kind of boom year. So 2022 is this period where the fiscal expenditures were kind of winding down somewhat and the tax revenue was winding up pretty well. And so that was kind of a contraction event. It was also Fed tightening. So most things were bad for the markets. Whereas this year, it's almost like we've gone far enough that now we actually have widening deficits again. So on one hand, obviously the COVID era types of stimulus have wound down, but we're still running these background structural 6 to 8% of GDP deficits. And then ironically, as they increase interest rates, they blow out that deficit. And so they put pressure on some areas of the economy, but then these other areas of the economy, wealthy retirees, basically like a bunch of different types of segments of the economy are still spending pretty aggressively. Now, it's when you look at manufacturing, like when you look at the PMIs, when you look at most types of indicators, I think we still generally see deceleration towards a risk of a recession later this year or next year. But I expect it to be kind of mild and certain sectors to be in a recession, whereas others might not be because they're not equally affected. I expect them to probably try to hold rates in this kind of band for a period of time. They could still get a couple 25 basis point increases potentially, but I think that right now they're going to see as their lagged effects start to impact the market. So like I said before, the public deficit sector, like the public debt financing still hasn't fully financed at these higher rates. Basically over as more and more debt finances year after year after year, you would start to move towards a much higher average interest rate. And the same is true when you look at the corporate sector, when you look at the bank lending sector to commercial real estate or other sources. A lot of this still has to refinance at the higher rate. So merely by staying at the levels they currently are, they'd still effectively be tightening. And so I think that's the approach they seem to be signaling that they're going to do for at least a couple of quarters now. So sometimes when you have a higher period of inflation, you get equities that don't necessarily do well in real terms, but they hold up better than you might expect in nominal terms. For example, if you look at emerging market recession, often the stock market in local currency terms doesn't look like a recession. It's often going flat to up in that type of environment. But of course, that's a pretty extreme environment because you have usually substantial emerging market level inflation along with that recession. So if we had a type of inflation that's more stagflationary and we still have kind of ongoing background nominal numbers that are decent, even as the real numbers are negative, that's you could have an environment where the equity market maybe doesn't do as badly as we think it does, or at least certain parts of the market. Another way to look at it is that, for example, during the dot-com bust, the NASDAQ came down tremendously, but if you were looking at, say, healthcare stocks or REITs or the price of oil or energy producers, there was a lot less drama in those parts of the market or pricing around that area compared to what we look at when we see the major indices. So I think it'll be somewhat sector specific. And I think that much of the negative kind of risk to the market is more in real terms than in necessarily nominal terms. But you can still have easily a 10, 20% drawdown. Those are normal. So I'm still reasonably constructive on energy. When I look at the full healthcare sector, you have to be careful with certain regulatory risks, but overall, that's a reasonably priced, value-oriented sector at the moment. As well as I think things like T-bills are attractive in this environment. You don't have to be fully invested in the equity market. And I'm still bullish long-term on gold and Bitcoin at these levels. So I think it'll be somewhat affected. I just think that basically the price is already almost like at recessionary levels. So part of why we've been able to push oil down as far as we have is because we purposely brought on, in some sense, artificial supply while curtailing demand to a significant degree. We've had basically borderline manufacturing recession, kind of slowdowns in certain areas. And so that combination of demand moderation and supply side improvements have already, I think, the energy sector kind of looks like a recession, but I think that it could hold up better than we think over the next, say, 12 months. And then whenever we emerge from that recession, like when we move forward to the next period of growth, I think the issue there is that without a capex cycle, so if there's not a lot of new supply coming online in like an investable time horizon, then I think that until we have that happen, that the supply side is just going to get tighter and tighter and tighter, and that most of the oil companies, when you look at them right now, they're still prices, though these prices are kind of locked in indefinitely. And even if oil would have dropped to 70 or 60 and places like that, the large caps are still relatively priced for that scenario. So I think the downside risk is somewhat moderate, whereas the upside potential over, say, a 5-year period is pretty significant. Commodity monies use nature to maintain the ledger. And so as we've kind of iterated through the different commodities, gold is the most immutable or reliable natural ledger that we can work with. If you look at banks and central banks, obviously that's a nation state administered ledger. And so it comes down to how banks are regulated or what the structural kind of fiscal situation is in that country. You're basically relying on humans to maintain that ledger in a pretty centralized way. And then open source money like Bitcoin is that the users maintain the ledger. So you have this decentralized ledger backed up by energy, backed up by individual nodes. And so I think it comes down to which one of those three categories you trust more to be the administrator of the units and the ledger and the immutability of the money that you use on an ongoing basis. I think that'll generally only be the case if Bitcoin is much larger and more adopted and more widely held and liquid. So generally, you see money serves as multiple different solutions. So it's store of value, it's medium of exchange, it's unit of account, and generally it goes in that order. So we shouldn't expect to see a lot of merchants accept Bitcoin unless a lot of people hold Bitcoin. So it's kind of like that flywheel that has to happen. And so I think at the current time, in certain countries, it's more of a medium exchange. But for most people, I think the most users of it are holding it as a long-term store of value that's globally accessible wherever they go. So for example, if I hold gold or equity as a store of value or a house, I can't bring that with me globally, whereas Bitcoin I can. And so for people who that attribute is relevant to them, or they're looking at it as like a tech play, they think, okay, this is just structurally going to adopt over time and it'll appreciate for that reason. Right now it's in more of that store of value phase. But I think in general, until you have more people hold larger amounts of their cash balance in it, you wouldn't necessarily see a lot of merchant adoption. But I think it's mostly a matter of time, which is that if we 10x the number of people holding it, if more people hold a larger amount of it, and part of it's just its own hardness. Basically, as fiat currencies keep diluting over time, and as Bitcoin stays with its very stable and decreasing monetary issuance, I think over time that appeals to a larger and larger global audience, and then it starts mattering. And the way I'd put it now is that in any one country, obviously the local currency is by far the dominant medium of exchange. But if you think of assets that you can bring globally that are money-like, I think Bitcoin is already in one of the top 10. So for example, I have Egyptian currency, I have Norwegian currency in the drawer next to me. And if I were to go around in a 10-mile radius trying to find someone that will accept those, it'd be pretty challenging. Whereas I could actually buy something in Bitcoin easier than I could with those monies, which of course is not the case in Egypt or Norway. And so Bitcoin doesn't really have that center of density that most other monies have, but much like dollars internationally or gold coins internationally, I think it's already a pretty saleable international money, and it's just a matter of time before it becomes more entrenched, I think, on a denser level like that.
Lynn Alden's insights provide a comprehensive understanding of the economic landscape. Anticipating a possible mild recession, her analysis underscores the intricate balance between deficits, taxation, and expenditures. Alden's perspective challenges traditional views of recession severity. Her assessment of gold and Bitcoin highlight their distinct roles, with gold's historical stability and Bitcoin's innovative potential. As we navigate these dynamic times, Alden's guidance encourages us to remain informed, adaptive, and open to opportunities. Her insights empower us to make well-informed decisions in a complex economic world. Thank you for watching today's video. Please subscribe to our channel and keep watching.